Hello everyone, Suresh KP from myinvestmentidea.com. Today we are going to review about Aditya Birla Sun Life Special Opportunities Fund NFO. Is there something special in this fund? Before we get into NFO information, let us check about what are exactly these special opportunities funds are. So if you see, these funds generally invest in opportunities that will arise based on special situations. Like example, there is a corporate restructuring happening, government policy changes, there are regulatory changes, etc. So, but these opportunities generally are limited number. Okay, in short term, there could be sometimes in a year there could be many opportunities, and another year there could be very less opportunities. Now let us get into the NFO information. So ABSL Special Opportunities Fund investment objective is to invest in opportunities that are presented in the special situations such as corporate restructuring, government policy changes, regulatory changes, any companies that are going through temporary but unique challenges, and the similar instances. The fund managers are Mr. Anil Shah and Mr. Chanchal Kandelwal. If you see, the issue is going to open, the scheme is going to open on 5th October. It's going to close on 19th October. And again, after 5 working days, scheme is going to reopen for the purchase and sale. Minimum investment for lump sum is rupees 500 and SIP is also 500 per month for 6 months. There is an exit load of 0.5% if anyone is exiting within 3 months. And the risk here is very high. The expense ratio is at 2.25%, and this scheme is benchmarked to S&P BSC 500 TR index. Let us talk about the allocation pattern. This fund is going to invest 80% to 100% in the equity and related instruments of special situations theme. The risk profile is high. It will invest 20% in other instruments. The risk profile is also it's high. It also invests up to 20% in debt instruments, money market instruments. The risk profile is low to medium. It also invests up to 10% in REITs and INVITs. The risk profile is medium to high. Let us talk about some of the reasons why we need to invest in this fund. So this fund invest in special opportunities that will arise through the corporate events, government policy changes, regulatory changes, etc. So there is no other category of mutual funds to tap such opportunities. And this fund generally aims to tap opportunities where, example, now today because of COVID-19, there are a lot of opportunities that are coming, and there's no restriction either on the market capitalization or sector. It can invest in small cap, mid cap, large cap. It can invest in banking, pharma, wherever the opportunities are there. Let us talk about some of the risk factors here of investing in this fund. This fund invests only in the specific opportunities that is arising through the events what we discussed earlier. So this would limit the capability of the fund to invest in all themes and all sectors kind of thing. And this fund will invest in opportunities where in a specific period there could be very high number. And if you see example this year because of COVID, there could be very high number. Maybe after next year in 2021 or 2022, the opportunities could be skewed or it could be very low. So in such case, what happens is the returns could highly fluctuate. Okay. And this fund invest in only special situations, means the concentration risk is very high. Interest and invest in REITs and INVITs. Generally, these are considered as a high risk. So you can refer complete risk factors of the NFO prospectus before investing in this fund. Now, if let us come over checking about some of the existing funds in the Special Opportunities Fund. If you see, there were few funds which were existing before the SEBI recategorization of fund. But now all those funds are categorized as a large cap, mid cap, wherever is going to fall respectively. So currently there are some India opportunities fund, but they're actually not apple to apple comparison. So we don't want to compare those funds with this special opportunities fund. Now let us talk about the conclusion part. ABSL Special Opportunities Fund invest in a special situation theme. What we discussed earlier, it's going to invest in opportunities that may arise because of the corporate restructuring, because of the government policy changes, because of regulatory changes, XYZ. And these opportunities generally today there are very high because post COVID-19 there are a lot of opportunities that are coming. But after post COVID-19, maybe in 2021, 2022, the number of opportunities could be limited. Now, if you see, the returns can significantly fluctuate. Example, this year it could be 10%, 15%, 20%, and later on, if the opportunities are very less, then your the returns could be very low. So one need to at least to get about the what you call the understanding about these funds. So one should invest at least say 4 to 5 years minimum to understand and see how this fund is performing and to expect some returns from such funds. So my advice is investors should invest in equity funds or sector funds where we have a clarity. We know year on year how the index is performing, how the mutual funds are performing, and then we can take appropriate action either to invest in new funds or replace with the existing fund. But yeah, this fund, at least we need to wait for say 4 5 years and beyond that to understand really whether this fund is performing well. So my advice is like just stay away from these kind of funds. If you have any queries, reach me Suresh at myinvestmentadvice.com and keep visiting myinvestmentadvice.com. Thank you.